The market shoots lower after the Fed meeting. Have the bulls blown their opportunity? This is Invest with Jacob. Okay guys, so in yesterday's video, we talked about our primary path being down after the CPI spike on Tuesday, and that's exactly what we saw after the Fed meeting on Wednesday. The market slammed down and broke some key support, but did bounce up at the close, giving the bulls a glimmer of hope. The question is, can they follow through? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the spike down by the Fed, they did break some key support, but not all, so the bulls do still have a little bit of hope. So let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And as you can see, we did get a move up into the Fed meeting, and then right at the Fed meeting, they spiked it down, broke Tuesday's low, and broke through the 618 retrace of the move up. But they did hold over the 764, which is kind of the line in the sand that we normally look for. So that would be a glimmer of hope for the bulls that they were able to hold that low for now. They bounced it up a little bit, but have started to sell off again back toward that low. So the bulls do have a glimmer of hope, but right now the bearish path does look like it's playing out. And what we would look for here is our primary path being that, again, the top was A, where we got that 4-5, okay, that we talked about in yesterday's video, and that we're starting this B wave down, and that move is going to be a 3-wave move. So what we would look for here is this being A, B, C of A down towards 39.40 would be a completion point for that move down, or possibly as low as 38.82, and then a bounce up in B, and then a C wave down toward that 37 to 3800 area we've been talking about, and that would complete the B wave down, and then from there we would look for that C wave spike back up over this high toward the 4300 plus area to complete that move off the 3500 low that we've been tracking. So that's our primary count and how we're looking at this and what the bears can do as far as pushing this down. We would again look at 39.40 to 38.82 as a completion of this initial move down. Then we'd look for the B of B here, and then the C of B spike down toward the 37,3800 region before trying to find a reversal at that point back up towards 4,300. There is an alternate here for the bears. It's not as likely, so we're not really going to count it as a something we want to keep, in the forefront of our mind as something we're going to trade, but it is something we need to pay attention to, and it is that this could be a bigger expanded B wave of the B wave. So in other words, you would have an A down, a B up, and then a C wave down, and that means that this would be a C wave move that we're looking at. And with the violent crash down off of the CPI high, the corrective spike up, and then another strong crash down, it is possible that that's the case. Okay, so we would again have the A wave down. This would be an expanded B wave, and we'd be already in C of B, and then we would target that 37 to 3800 area more directly. And a strong sign of that would be if they break down through that 38.82 level without any kind of major significant bounce. So that 38.82 level is going to be kind of where we watch to see which bearish count is playing out. But I do think we should still get an ABC down in B. However, if they push through 38.82 directly without much of a bounce at all, then we would be looking at that C wave down toward the 37 to 3800 area. For the bulls, okay, as I said, they do have a glimmer of hope. We still have this 1-2, okay, so they have a 1. They just made a deeper 2 yesterday in that scenario where they held above the 764. And then from there, we would look for them to break out to the upside over 41.98. Now, that's not going to happen directly because, remember, in a wave 3, we need to count all of our waves. So we get one of 3, which typically targets the 0.5 to 0.618 extension of wave 1 and 2. That's at 41.29 to 41.60. So we would expect a move up to that area, then a small pullback, and then a move up that blows through that 764 top of the pivot area at 41.98. So if they blow through 41.98, then the bigger move up can play out where we head toward that 4,500 number. But again, with the move down today, that's starting to become less likely. And if they break the 764 retrace at 39.76, then it becomes much less likely. So that is the bullish path that we would look for. The bulls would again need to hold above that 39.76 area, then create a 1-2 count, and then break out over the 41.98, or we can just call it 4200 area at that point, and extend to at least the 42.61, but really we'd like to see the 43.23 area to really confirm that we are going to be moving up in that C wave more directly up toward that 4500 area. So those are the paths we are tracking on the ES. Let's take a look at the NASDAQ. Okay, on the NASDAQ, again, similar types of setup where we would be looking at the bearish potential of this being wave A, and then looking for this ABC down. We would look for the A to hit the 11,469 to 11,237 area, then look for a B wave bounce, and then C of B down toward the 10.8 area to 11,000 area to complete that move down, and then we would look for that C wave back up toward the 13,000 plus area from there as our primary count. Now, just like on the NASDAQ, it is possible, or I'm sorry, just like on the ES, it is possible we did get that expanded B wave move. And in that case, we would already be in wave C, and we would be targeting that 10,862 area for that as well. Except in that scenario, they would come down in this wave 1, have this wave 2 bounce, and then they're already starting into 3, where they would need to break down below this 11,237 area and follow through more directly, in that case, toward that 11,000 to 10,862 area for the B wave, and then the C wave spike up toward the 13,000 plus area from there. So 2 scenarios also on the NASDAQ for the downside. Bullish scenario plays out exactly the same. The wave 2 just is a little deeper now, and they need to break up to the upside, and you would look for wave 1 of 3 to break up toward the 12,002 to 12,300 area. Then you'd look for a pullback. Then you'd look for them to blow through the 12,449 area and extend to at least 12,669, and at that point it becomes a much stronger case that we're heading toward that 13,600 to 13,800 area more directly. Guys, if you like the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link and it'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there and make sure you love it and become part of our trading team before you ever spend a penny. You can cancel at any time. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, as well as a midday video where I break down exactly where we are in the counts and what our expectation is and which count is playing out. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are looking for day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a small price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can make some money together. All right, key takeaways for today. We're looking for one of our 2 bearish counts to play out to the downside, where they break through at least 39.40, and then if they're going to take it directly down, they need to break through 38.82 without much of a bounce. However, if they are going to bounce first, we would look for them to bounce around that 39.40 region, bounce up in a B wave, and then give us C down towards the 37 to 3800 region. For the bulls, they need to hold the low and then bounce it back up and ultimately take out the 4200 region to give us an indication we're on our way towards 4500 from there. Over on the NASDAQ, we have similar setups, looking for a move down toward the 11,469 to 11,237 region, then a B wave bounce, and then C of B down toward the 10.8 area. However, if they are able to blow directly through that 11,237 area, we would expect them to extend down to the 10,800 area more directly without that B wave bounce. For the bulls on the NASDAQ, they need to break out over the 12,449 area and ultimately over 12,669 to give us an indication we're well on our way to that 13,600 to 13,800 area. Guys, that is the market update for today. I will talk to you tomorrow.